My name is Ziad Al Isa. I'm the Vice President of Business in Saudi Payment, which is a new entity span-off from SAMA. Our main mandate is to operate the payment infrastructure and national payment infrastructure of Saudi Arabia, and we've been doing that since 1985, but we recently corporatized. We are still a full subsidiary owned by SAMA. We're doing all the payment landscape, starting from card scheme, billing scheme, invoicing, and we're also operating the RTGS on behalf of SAMA, but still the scheme is owned by SAMA.
Why did SAMA decide to corporatize it? Why is it something that has been done as an internal function of SAMA for so long? Why now have a company do it? Why spin it out?
Okay, it's actually a very good question. Well, since the beginning of establishing the payment system department within SAMA, it was the plan to span off to give it more agility, more resilient, more quick response to market. So that was the plan since the beginning, and when the Vision 2030 started, and in particularly the Financial Services Development Program, one of the main or one of the game changer initiatives is actually cashless society, and it includes so many initiatives behind it, and one of them is to corporatize the payment system, to separate the regulator function from the operator, to give it more agility, to give it more quick time to market, etc.
More accountability, presumably. I mean, if you're not the regulator, and you are accountable for the performance. Thank you. Ronit, tell us a little bit about who you are and what you do.
Sure. Thank you to Euromoney for inviting us.
Pleasure.
My name is
Love to have you
Ronit
here.
Ghosh. I'm Managing Director at Citigroup based out of Dubai. I run our global research franchise of financials, including fintech. We write a lot about fintech globally. We began about 5 years ago writing about what was happening in China, which was at the time the epicenter of fintech. A lot of our work is publicly available. You can just Google it or download it. No firewall. You just put my name in or Citigroup and you'll find it there. So you can see what we write about. We also advise our clients on their strategies, including raise capital for them, including in the fintech space. And we're one of the biggest investors in fintech in private companies, mainly in the US, but we're very active on that front as well. Outside Citi, I have a couple of advisory roles working on behalf of small fintechs in the UK and Africa and emerging markets.
Why are you I mean, Dubai, being based in Dubai as the center of global banks research, is there a reason for that? Or you just like Dubai, or is it you feel that you're sort of in a place where you can see more of the world than just being in Berlin or London or New York?
So why Dubai? So I said about 5 years ago, we focused more on fintech and really looking at digital, how digital was transforming finance, starting from the really small, startups being set up by my friends, to giant companies, be them banks or card processing companies, the Citis, the Visas, the MasterCards, and how they were changing. And our thesis was, and it's largely played out already, that the change was profound in countries like China, India. So what you were seeing in the US was do something cheaper, do something faster. What you were seeing in China was, or in India was, and now increasing in Middle East and Africa, and I guess we'll talk about this on the panel, what we were seeing is do something different. Not cheaper and faster, that's good. I'll have a faster horse, but I'm going to replace, it's an old analogy, I'm going to replace the horse with an automobile. I'm going to replace the balloon with a plane. And what we're seeing now is like yesterday when I flew to Riyadh from Dubai Airport. If you've just been through Dubai Airport, you see the smart gates. Now those aren't the smart gates where you put your Emirates ID in. It's a smart gate where you just walk. That's completely different. Yeah. In a way, we're going back to where the intimacy of a previous generation where people knew who we were. And you didn't need to show ID. Yeah. You just walk into the...
Now artificial people know who we are.
Yeah, AI is taking us back into... We can debate that as well, how AI is changing finance.
But listen, I mean, we could... I can see you're passionate about it, and it's interesting to see you're in Dubai. We're going to come back to those themes, but I need to introduce the rest of the panel, otherwise we're never going to get down the end. Naveen, who are you?
Yeah.
What do you do? Why are you here?
Naveen Gupta, I'm Managing Director for Ripple in South Asia and MENA, and fundamentally our mission is to move money like information moves today. Like you can send a WhatsApp to me, the same way you should be able to send a payment to each other in a safe, secure, and an easy manner. So we focus on customer centricity. There are hundreds of institutions around the world who use Ripple's technology to make cross-border payments instant, error-free, and very, very low cost.
And you've been working with Sama. I mean, Sama was one of the first people in this part of the world that you worked with. Just tell us a little bit on what the nature of that cooperation is.
Yeah. So first of all, SAMA is a very forward-looking institution which essentially invites a technology company like ourselves and banks who are our users in one single place to essentially say, here's a safe place for you to adopt this technology, experience and share both good points and bad points, right? Things that work, things that didn't work. And once it works, it delivers the benefits that it's supposed to, and as a regulator that we are comfortable, then go and build it at scale. And that was wonderful for us because you are not experimenting 101, you're experimenting with a group of individuals, working along with the regulator, and making sure both all the good points and the bad points get highlighted, and the technology then can be commercially used at scale.
It's fascinating stuff, and thank you. We'll come back to that. Saleh.
Yeah. Hello. Good morning, everyone. Thanks for the opportunity. My name is Saleh Musaybah. I'm the CEO of STC Pay. STC Pay is probably now well known. It's a very independent subsidiary that is owned by STC Group. It's fully regulated by SAMA. As an organization, we provide services to our customers, focusing initially on STC customers, but we actually go beyond that. We provide different type of services to our customers, whether being users or merchants. We're trying to be very customer-centric, more than anything else. And based on that, we evolve our products and services.
And again, why are you independent? Why you started by stressing the separate nature of STC and STC Pay.
Yep.
I mean, you keep the name STC. Obviously, it's a very well-respected brand in this country. Why is that separation important to you? I mean,
from regulation perspective and operational perspective, you see, we want to be able to keep the agile DNA within the organization while leveraging all the funds that we have in STC.
You're suggesting that STC isn't agile?
No, STC is a large corporate.
I know, I'm teasing.
Okay,
Yeah.
so as a large corporate, don't expect massive, bold moves to be able to make it with all the governance that is needed. The other point, which is actually the main point, is the fact that STC has a regulator separate from the financial sector regulator. This is actually the main reason that by which STC decided to make this separate. For STC perspective, probably you've seen a lot around the world, M-Pesa is one example. Many telcos have decided to get into the financial industry. Many of them have succeeded, and many of them have failed. STC decided to take the ball, take the lead, and put the investment in this area with the knowledge and the information that STC Group has in its customers. We have an edge. Making it independent, which was enforced by the regulator, but also making it independent gives us the luxury of being agile at the same time, well funded by a rich group. Yeah,
absolutely. With a lot of customers too. Thank you, Saleh. Peter, tell us a little bit about what you do and who you are.
Hello, I'm Peter. I'm basically part of the founding strategic management team of Beehive. Beehive is the GCC's only regulated peer-to-peer lender. We're regulated out of the DFSA and also out of Bahrain as well. We started back in 2014, so a long time before anyone in this room probably even heard the word fintech. Potentially a few of the panel might have heard the word fintech, but I imagine a lot of them in the room wouldn't have heard the word fintech at that point in time. We have basically built out our platform in the UAE, and what we're now doing is leveraging that technology to help financial institutions as well do faster, quicker lending decisions, but also bring new products to market quickly as well, primarily focused on the emerging markets.
I mean, must have been interesting times, 2014. And well, anyway, never mind, I won't go there, but I know the sort of blank looks you must have received when you said what you did. What, other than not understanding the fundamental concept of what you did or what a fintech was, what did you find as the major obstacles and challenges in the region to the establishment of Beehive?
So at the beginning, the key problem actually comes back to actually one of the parts of this discussion is data, and basically the complete lack of data available at that point in time for corporates. Obviously in the UAE now you do have a central bureau, but it still doesn't give the quality and quantity and depth of detail that you'd expect. Recognise that the credit bureaus here in the kingdom actually are of a much better resilience, and that they have a lot more information, go back a lot further as well. But I'd say the main problem in the UAE was actually the lack of data. And then the second point, obviously, what we ultimately do is we connect investors with borrowers. Now, what you have at the very beginning is another thing which basically could have been picked up in the last session but wasn't, is trust. So when we launched unregulated, because there was no regulation and the regulators had no desire to touch us with the barge pole back then because they didn't understand what fintech was or how to regulate it, at that point in time, obviously you had to basically bring investors over the line that actually you acted in a similar manner to being a regulated entity. So we tried to mirror, for example, the UK FCA rules as closely as possible. But those are kind of the two, I guess, the key things that we found struggling when we started.
Yeah.
And I suppose the other one was no VCs knew how to invest in us either. So.
I would have put the other two, I think the first one is a fascinating one, because you sort of assume it's going to be capital and regulation and lack of market knowledge, but you say, well, there's no data, how do we make allocation decisions? It's a very, very interesting thing to say. Erwin, very much not last, but not least at all, please tell us a little bit about yourself and what you do.
All right, good morning and thank you for having me. I appreciate being here and seeing all of you. I represent Temenos. Temenos you might know as a core banking provider. We are not. We are actually a fintech. So we are a software provider in all kinds of senses. I represent the digital channels and the payment solutions. We have to emphasize how serious we are in this field. We recently announced the acquisition of Kony, one of our main competitors in the digital field. So that shows that we are definitely in another field than only core banking. I came here because I think Saudi is, in financial services, hip and happening. You see consolidation of banks. You see a Vision 2030. You see a SAMA sandbox. You see immediate payments coming in maybe in a year and a half. So I see significant changes. It's a market which is opening up, which has been maybe a little bit closed, and now you see immediately from being hold back, you see the freedom and therefore the changes in the market significantly. So it's exciting.
I mean, you touched on you used the word consolidation, banking consolidation. As a provider of services to banks, is not banking consolidation a bad thing for you because there are fewer customers?
I wouldn't say so. For thinking short term, I would think consolidation means a lot of changes and therefore a lot of work for us. Yeah. So if you would look at Saudi British and all, you would definitely say there is a lot of integration to do, right? Obviously. And during the integration, also innovation is required. So I would say it makes the work double exciting and attractive.
No, I mean, I don't happen to agree with what I said as a contention, so I'm glad you don't either. Okay, so now, thank you all. Fascinating, and we could probably do an individual discussion with each of you. So we have 35 minutes, even though it says 28. What I want to try and get from you gentlemen is some idea about where you think, what is the Saudi financial system? What is the global financial system going to look like in 5 years' time, in 10 years' time? And that sounds like, well, it's an extremely broad question, and you can answer it any way we like. I'm not going to ask you that question specifically, and also, what is the perspective? who are we looking at on behalf of? So, that's what we're trying to find out from here. We need to look at the payments, we need to look at the structure of financial institutions, and we need to look at all of that. But I make a contention that, depending upon where you are, if you are in the financial system, it will be very different. If you are outside it, it's going to feel less different, because the real changes there are in, perhaps, as you said, Ron, it's not in the difference between a balloon and an aeroplane. It's just a better balloon. So why don't you talk to that? I mean, I think you will still have banks here in 10 years, and I think they will be fundamentally similar institutions. They may do things differently underneath the hood, as the Americans say, or the bonnet, as we say in England. But essentially speaking, you're going to still have Samba and obviously you're going to have all of the banks that sponsored this conference and none of the other ones.
Absolutely.
And there is no correlation between those two things.
Yeah.
Citi will be here.
Clearly your sponsors are forward-looking banks, right?
Yeah,
so
absolutely.
we're going to be here.
Clearly.
But I mean, I agree with some of what you're saying, but not everything. In the short term, nothing much will change, or it'll appear nothing much is changing. But when we step back and look at spans of 10 years or 20 years, huge amounts change. I saw one of your magazines outside which had, is it 50 years of Euromoney?
Yes. I've been around for half of that.
Exactly. But it's 50 years of the moon landing, right? That's a bigger, maybe it's a bigger event, I don't know. But for my kids, it was a bigger event. We watched a lot of moon landing videos and went to the Science Museum in London. It's also 50 years of the ATM. And if you lived before the ATM and you lived after the ATM, huge things changed. It's obvious to us. But if you lived before the ATM, your bank shut down at 3 p.m. And the slogan, sorry, this is not meant to be corporate PR, but I'll give you, I can see our head of public affairs there. But we have a slogan, the city never sleeps, right? Because we were originally the City Bank of New York. City never sleeps, because someone sang that once, New York never sleeps. But in the 1960s, Citi used that as a marketing slogan because before the ATM, the bank went to sleep. You couldn't get your money out. After the ATM, you had 24/7 banking back then. So a huge amount changed. If you lived in the 1950s, you didn't have credit cards unless you were a handful of people in New York. So in the 50s, 60s, and then banks took that global, banks like Citi, huge amounts changed. In the last 10 years, what's changed is we're living in this generation, right? The I generation. So my children's generation are digital natives. Banking will be fundamentally different for them. Hopefully, we will be an app on their phone. But if you don't change, you will be left behind. Some things are the same. Banking is about safekeeping. Since Babylonian times, since the Mesopotamian times, I go to a bank, give them money. They keep it safe for me in the temple in the Babylonian times. Safety, i.e. deposit taking. Credit and lending, payments. Those fundamentals haven't changed for 5,000 years. How we do it has changed. And the types of banks that are going to be winners over a 10, 15-year period will be very different to the types of banks that will be losers. You just have to go back and look at some of the Euromoney editions from 10, 15 years ago and look at the names. They've changed fundamentally. So I think there will be a lot of change. And management teams who underestimate that will be left behind.
But do you think there is... You look at a country like Saudi, and Ammar was saying, it's bigger than banking here is bigger than Poland. It's not. It's a medium-sized country, medium-sized emerging market. It's not. But how can a company like Samba or NCB or compete either with you, if you're a global platform, or with Ant Financial? It will not have the data. If you lose a local bank like Samba or all of the local banks, how can the government control the economy? Sorry, so it's a little easy question to throw away.
All easy questions, yeah. You've got to unpackage the definition of scale. In some businesses, having global scale is a key advantage. So if you're doing cross-border payments, if you're a big bank like a Citi or an HSBC or a JP Morgan, you have an advantage there because these big banks move trillions, like $1 trillion plus a day. If you're a small bank, you can't compete with that because you don't have that network. But a lot of business takes place locally. And if you're a Saudi bank and you're dealing with Saudi consumers, your competitor is not going to be Alipay, it's going to be potentially STC Pay. Because if you have data on all those consumers, you're going to know them better than necessarily big companies from outside. And it's questions of what do you do with that data? Because data is being, as you know, data is being created at an exponential rate right now. It's a bit of a cliche, the whole data is the new oil, but it's most of the data we have today got created in the last 2 or 3 years. So if you're on the ball right now, you can write that and use that data to lend more, do more payments, whatever it is you want to do. And maybe financial, and this is the biggest risk for banks, maybe financial services isn't what you want to do as your core service. Maybe what you're doing is your core service is social media, or gaming, or e-commerce, or ride-hailing. And financial services is just an enabler. Because ultimately, none of us wake up in the morning saying, I need a loan. We wake up in the morning saying, I want to buy a house. I want to go traveling. I want an education for my children.
Yes.
Financial services is an enabler.
Yes, those are all good points. Naveen, I'm going to come to you as another international member of the panel. How do you see yourself? I mean, you know, we talked about your relationship with Sama, but this business of the relationship between global platforms such as Ripple and local entities. And by that I don't just mean banks, but non-financial institutions, regulators, all of that. You know, how do you see that developing over time? And what is the sort of balance of power almost between those two types of people, national and global?
So fundamentally, first, I just want to pick up on your earlier question that Ronit answered, right? And I think that's a good segue into the question that you've just asked. So how did US become such a superpower in lots of industries that have evolved, right? So what US said is, we have an open, free market experimentation economy. We have a decent enough domestic ecosystem, and then we'll trial this idea, build them at a certain scale, and then we'll build them globally. That's how PayPal, Remitly, Riyadh, Zoom, lots of companies have been formed. MoneyGram, Western Union, originally they were formed in the US. Actually, if you look at the top 3 cross-border markets, origination markets in the world, Saudi Arabia is one of them. And if you look at the GCC region, it's definitely bigger than many Western markets around the world. But what we have not taken is created new companies in, say, for example, cross-border space, and then taken those once they're operating in scale in Saudi or in GCC global, right? So there is no reason why what has been done in the US can't be done in areas where GCC markets already have scale because they're very, very remittance heavy markets, right? So what we need to do is, and there is also VC money available, right? So there is no dearth of money. In fact, money from GCC gets invested globally all over the world, which then gets recycled into different form of risk allocations, right? So all the fundamental things are there, and if everything was to come together, this can actually happen here with things that have scale within the GCC and take them overseas. The second point I want to make is that all institutions will need to focus on either one thing. Either they will have to focus on customer service or customer experience. And that's the reason, you know, Amazon always talks about customer obsession, to say, how do I deliver the best service possible to Ahmed, right? And that's my sole purpose in life. Once you have figured it out, then you will be number one, because Ahmed will always work with you. It will trust you as a brand. It knows that it cares about you. And here, for banks, the competition is not other banks. The competition is WhatsApp. The competition is Amazon. The competition is Google or Netflix, because people will trust those brands otherwise. So what we do is we help these banks to essentially say, here are tools available. Here's the technology that's available for you to become cheaper, faster, better, and compete with these fintechs before they come on. And the second thing is innovation on the plumbing side, because you can't deliver a great experience if your plumbing is broken, right? And that's where we have a lot of innovation that's available, which is the same tech that's available for people globally, better than anything that is around there in the world for institutions to leverage and then build at scale on and to deliver to their customers. So to my mind, these two innovations need to be happening. On the customer obsession side, there is quite a bit of work done, but it's really on the plumbing side that more work needs to be done, and that's where we come in.
The average customer experience. Okay, I have been a corporate customer of Saudi banks. I will not say which one, but they're not a sponsor. And I am obviously a personal customer of, and a corporate customer in the UK of a number of global banks, one of which is a sponsor. I wouldn't even say that the UK experience has been customer-focused. You know, you dread having to interact with your bank. In Saudi, it was even worse. Do you think that institutions really understand, the financial institutions really get this? That actually what they've got to be delivering is an exceptional customer experience or customer service? Because, do they? I mean, is there an example?
Yeah. So I think if you look at a number of new institutions in the UK, Revolut, right, Monzo,
Starling,
I think that's what,
yeah.
that's their leading point. They're leading in the front, or even I would take, for example, STC Pay, because I do some work with Salah. The fundamental thing is they are leading with customer obsession to say we have no other differentiation but to make sure Richard has the best experience when he interacts with us.
Yeah.
Until they continue to deliver that, the customer will be hooked onto them. And that's how the customer got hooked onto the brand itself, because at the end of the day, brand is nothing but that delivers on the promise what was said in the original place.
Yeah.
Right?
I think he was being polite to the banks by saying client experience. Because his second point actually ties into the first point. Because the pipes are broken in many retail banks, so your client experience is bad.
Yeah, it's
so that's why.
even if you want it not to be.
I think it was just being nice.
We don't need to. Well, you need to. You need to be nice to me, but otherwise, you don't have to be nice to any other banks. I'm going to come to our two Saudis. Like, I want to get the international, and then come into the sort of how we put that to Saudi. So I'm not ignoring you, gentlemen. Erwin, I want to come to you next, and sort of again segue from this conversation that we've developed here. And thank you, Ronit, for that thing, because that's given me the question I want to ask Erwin, which is, look, I mean, you know, there's two things. There's volition, i.e., as an institution, we want to deliver good value and exceptional service to our customers. And as an institution, the second thing is, how do we do that? How do we maintain, how can we as a Saudi institution be as competitive as an institution that has 800 million customers? Competitive from a data gathering, competitive from a product point of view. How do you see that, given as a provider of core banking solutions? How do you manage to? Sorry, I'm being given messages. How do you manage to transfer that to a local entity?
Right. Great questions. Let me first start with responding. As I said in the introduction, I'm not a core banking supplier.
Yeah.
I'm really not. I'm hired because of the digital channels and payments offering Temenos has.
Sure.
I actually don't know much about core banking.
No. But the principle is the same.
Just as a...
You're supplying a global standard product to local institutions. Yes?
I'm going to answer your two questions, but let me take a little bit of a step back and come back to the question also. You said, is the industry changing and what's really changing? And then we address how the customer experience is going to change or how it's changing right now. Fundamentally, we're not changing. Fundamentally, banking stays lending and funding, right? That's what we do. That's what the previous speaker also said. Technology changes. That's what we're saying. Yeah, if you look at all other industries, you see technology is the part which is changing the most. And how will we shape up and how will we organize as technology changes, right? Those are the real questions. We also setting the boundaries, we won't be disrupted. It used to be a term about a year ago, disruption was the key term. It's not going to happen. Why is it not going to happen? Because we're a heavily regulated industry. And a heavily regulated industry makes sure that the economy can run well. That's what financial services does. So disruption is not feeling too well. The Libras or the Facebook type of things, they won't make it. Back to the question, how is it changing? I think in the front end, the customer experience is first and foremost going to change in making things a lot easier. So what does that mean, design thinking? That means an approach where you can consider your personas, your clients are personas, and from these personas you start thinking in MVPs eventually, right? The customer journeys, the customer experience is going to optimize by a single click. It doesn't have to be much interaction, it doesn't have to be much thinking. And the banks, we're talking data, and data is definitely significantly important, but it's more important, what do you do with the data? And what can a bank do with the data? Personalize the offering. So make it easy, understand what your client is going through when he wakes up in the morning and thinks, I'm going to buy a house. He's not going to go to the branch, exactly as was said before. He's just going to do 1 or 2 clicks, and he wants to know what's his mortgage eligibility, for example. So what are we going to change in the front end is an easy approach. So no longer queuing up, no longer to the branch, any type of thing. It's not just an iPhone, it's any type of interaction which is possible, and it's just going to be 1 click. And the more it's integrated in existing devices and existing systems, the more it can be automated. So maybe some utility payments don't have to be done anymore.
From a payments point of view, I mean, as again, sort of picking up what actually a lot of the other panelists have said, I mean, the payment is the bit that I don't like. You know, I mean, the whole rest of the transaction, the looking for it, deciding, and having whatever it is I want, be that a mortgage or a new Ferrari, these are all up, entertaining, nice pieces. It's the bit where I'm making that transaction that is the bit that I dislike, especially if I have to stop what I'm doing, the fun part, go to, a bank, on an app, go through the whole thing, type in all the security stuff, So it's very much, it interrupts that process. Is what you and your clients are trying to do to make that process far less intrusive, far less painful, and therefore far less visible, which then removes, as it were, the branding of the financial institution from that trade.
Sounds like a perfect summary of, in better English than I was able to phrase it. But
well,
it definitely,
I'm sure your Dutch is better than my English.
But I want to say, taking away any hurdle to do a financial activity, that's what the banks need to do. We were talking, you were talking onboarding and origination, actually. Making sure some kind of documentation is provided for the regulator, or some kind of risk check has been done, or some kind of KYC is done. This all should be done in the background. The client and the consumer should not have any involvement with that. Actually, by coincidence, HSBC was mentioned. We actually helped HSBC for this seamless onboarding journey, where people don't have to provide any documents anymore, where people can just get a credit card by 5 clicks. And we try to help these banks with analyzing how the customer journey, where's the attrition, how to reduce that attrition, where's the customer abandoning a journey, and how to optimize that. It's also a phase of analytics. It's current days, it's not that long-term vision, but current days you need to have that seamless integration in onboarding, in origination, and your regulator should allow it.
Thank you. Peter, as our last international one, the relationship between an organization like Beehive, P2P initially, people talked a lot about P2P platforms as disintermediating banks. You were not a bank, you're not a deposit-taking institution, but you were doing one of the functions that a bank does, which is to take deposits or take savings and turn them into investment or lending or whatever you want to call it. Do you see that in the future, in the region, in the world, in Saudi Arabia, that there will be distinct entities like yourselves who are P2P? It's all you do, P2P, it's a matching thing. Or will you find that there are P2P platforms that sit under Samba or HSBC or Citi? So that, if I wanted to, say, take a little more risk, get a little bit more return, I could just take, £30 out of my savings account, which is all that I have, and move it over to the Beehive HSBC platform or whatever. So how do you, as a sort of challenger entity, integrate into the system of the future?
So I think there's a few things to look at. If you look at, for example, let's say what's happening in the US and the UK, let's start with that. So there, a lot of banks have intentionally pulled back from SME lending, and that's basically where the whole peer-to-peer and alternative lenders really started off. They moved into that space mainly because the banks decided to move out. either because the risk-weighted capital wasn't appropriate, that basically they couldn't make the commercial stack up, or for other reasons they've decided to move out. Therefore, there was a massive space for someone to move into. And that's what the alternative lenders have done. Peer-to-peer is one of those alternative lending classes. You'd also find a lot of just straightforward credit funds doing straight lending from institutions. Going back to your specific question of kind of what's the future like, will these platforms actually start integrating with banks? I think if you look at some of the Nordics, they've got some very interesting models there where it kind of picks up on what you picked up there. So, for example, and this actually gets around the weighted capital cost piece. So effectively, weighted capital assets. Basically, the bank will take the client on as an SME client. It will credit assess that client. It will decide that the client can have, let's say, $100,000. What it then does is go, I'm actually going to lend you $50,000, and the other $50,000 I'm going to give to my high net worth individual private wealth clients to see if they can get a return equal to me. The private wealth clients are happy because they're getting a great return from a risk place in the first place, which is from the bank. The bank's happy because it keeps it as a client. The bank's happy because suddenly it can extend it more credit than necessarily it would want to off its own balance sheet. So those are sort of the areas that you can see coming out, particularly of Europe and also East Asia as well. Here in the Middle East, from what we've seen, and we've been discussing with a number of banks and financial institutions, the idea of working together. Currently, it's more around the idea actually of them being, for example, a super investor. It's probably the best way of putting it onto the platform. So every loan that goes on, they take, let's say, 20% of that loan. Again, not indifferent to actually what you see somewhere like the US, where hedge funds, for example, will take whole loans off platforms like Lending Club, let's say. So I think you can see quite a wide range of platforms, and it depends on models, and it depends actually whether the peer-to-peer player itself wants to actually integrate or actually wants to stand alone. Because going back to the previous panel discussion point, in reality, banks make their money from a few places, but lending is one of the critical places where they make money from. Yeah, interchange fees are going, forex changes is going, transfer fees are going. How do you make money? You make money from lending. Yeah, and that's basically one of the critical points for banks that they really do stay ahead of the curve on.
Okay, we have about 6 minutes left because the minister is coming in, I think. Is that right? Is he? Yep. So we have our two Saudi gentlemen. Saleh, I'm going to start with you because I'm sorry that you had the beginning and the end. Here you are.
STC Pay is our client, so they can start first.
See, very client-focused. I like that. That's very good. So you've heard what everybody said. We covered a lot of areas. I want to come back to this theme that I have. Maybe I sound like a bit of a stuck record if I'm very analog about the whole thing. You know, STC Pay. I have Apple Pay. I've got all sorts of different things that want me to pay. How can you compete with those? How can you deliver an exceptional piece of customer service to your clients? And that's I'd like you, if you may, to answer that in two ways. First of all, what is it about you for your customers? Number one, and second is, what is it about the processes and the technology that you use to underpin that, which the customer may not see, but really underpin your ability to compete with Alipay or Apple Pay?
Okay, let me start this with a question. What is really the fundamental difference between traditional banking and fintechs? Is it the use of technology? Absolutely not. Actually, banking industry has been using technology before any other industry in the history. The fundamental different shift that happened now is the fact that now fintechs are not actually technology consumers. They're actually technology makers. So the fundamental difference between us and traditional banking is that we at STC Pay, we own large number of intellectual properties. We develop things internally. We have so many technologies that we build inside. That's one of the major fundamental difference in how we operate. Banks will continue to use technologies. We don't need to wait for the next version from a software vendor in order to provide a feature. We provide a new version of our app almost every 2 weeks. So fundamentally, as an organization, we operate as a software company. That software company does not sell its software. Actually, it sells financial services. Amazon is a logistics company. You see,
Yes.
Uber is a transportation company.
Yes.
But these companies, Tesla is an automobile company. These companies at heart are actually software companies. So unless banks, and we have a great example in UK, Revolut, is actually operating as a software company. So unless banks actually transform internally into software companies, using technology will not really help. So that's number one. Number two.
Okay, well, I've stopped you there. What is the difference between a software company and a regular company? How do you know when you're looking at a software company?
Well, being a software company means, I mean, if I ask you a question, how many releases Facebook release, you will be surprised. Facebook releases 600 releases every single day. So the amount of agility and the way of design thinking is much different. The other part is the fact that we go back to the zero-based design. We have the luxury to start from the beginning. We have the luxury we don't have anything to wipe. We don't have anything to lose. So we can go back to the drawer, start working, thinking of the customer. We actually don't think of competition. We actually think of our customers. That's the biggest difference.
That's it's very good to hear. Thank you very much.
Thanks.
We're just going to carry on until ministers appear and start looking at us. So, Ziad, I owe you an opportunity to speak. You've heard a lot of the comments there. Where do you think that what you do fits in with that? I mean, I'm a great believer. I'm not an economic nationalist, but I'm at the same time, I'm not necessarily sure that the best interests of Saudi consumers, be they corporate or individual, would be served by just being, a tiny part of a massive global software company or financial institution. I think there's a lot of value to be had in knowing the local market. So I think it's important to have local institutions, and it will do for all sorts of reasons. I don't see that changing, but those institutions have got to be competitive. That you can't say, well, I'm Saudi, but I'm useless, but you're going to still use me because I'm Saudi.
Yeah.
How do you stay sharp but stay local?
Well, I'm going to quite summarize, and I do agree with the most of what's been discussed here, and I think the big thing that we did not maybe shade the light on is the data, which is the new assets. I don't believe that the banks, the traditional banks, especially in Saudi, they're now making money. They don't have to go dig deeper and do big data analysis and find new ways of making revenue. And I think this is where fintech and software companies are going to do their analysis, find a way, like what Peter said, find a way, areas that been never discovered, and find opportunity, develop products that fit for purpose to the market that will make a difference between fintech and a traditional bank.
But you think that's sustainable? I mean, because there's an argument that says, actually one of our speakers just a little later on, Brett Winton from ARC, talks about how this is an unprecedented time of technological change. It's not just that we've got the steam engine or electricity or whatever, or the internal combustion engine. You've got about 17 different things all happening at once. Yeah. Underpinning that is information technology. And all the charts are doing this. But the frightening thing about the charts doing that is that they don't stop. That this process of change, this process of development is going to continue at least for the rest of my professional career, even if that's only 10 minutes. Do you see that you can keep this can be sustainably done in the kingdom? Or do you need to build entities that are going to go regional or going to have a bigger footprint in order to maintain the competitiveness?
No, I don't think so. I think you can start being part of a local market. You build your capability. You start serving the consumer that you are having reached directly with. When you grow up, you can go outside and you can extend your strength. But you still, especially in Saudi Arabia, the market is big enough to accommodate bigger player and smaller player, similar to what's happening in US. There are few of the biggest banks around the globe, and small banks with 1 or 2 branches.
That's a lot, yeah. And then Germany, there's about 8 million branches, but they're not massively competitive.
Sure.
Okay, I just want to check where we are. Isabel, are we 2 minutes? Okay, let's take a couple of questions. Do we have any questions from anyone? There's a gentleman here.
Thank you very much. My question is so simple. Now we discuss in traditional, and thanks to that we see the STC now doing a lot of things. What's missing is here is the financial inclusion. You know what's happening with the whole thing is now, what's missing while you're talking? Where is the people who doing financial inclusion? Who is doing the microfinance? Because the one who bridge the gap between STC or technology or software and the traditional, who is the champion is the microfinance people. Who is creating this? By the way, and I'm giving you just an example. I remember in Kenya, there is 2 companies doing wallet. One company licensed by central bank, the other one just, a company, a satellite company. That's off balance sheet, that's on balance sheet. So STC Technologies is ahead of all banks. What we need an ecosystem. Now, if you use technology, that, for example, I'm giving you an example, a small farmer, when he needs loans, he needs an insurance, he needs the loans. Where is saving? Saving is a product is missing in the whole when we discuss. Sorry to just talking about payment. You guys looking at the trader want to get paid. Bank is not ready to absorb financial inclusion. Financial inclusion is the future, because if banks in Saudi Arabia will not look at financial inclusion seriously, they will be behind. This is payment and loan, it will be easily get it inside or international.
Okay. We don't actually have any Saudi bankers on there, so we can't pillory them for not being financial inclusive. Does anyone want to talk to just the concept, not specifically to Saudi, because I wouldn't ask you that, but to financial inclusion, the role of technology in that?
So I think the only point I want to make here is why lots of times banks are not be able to have financially inclusive products. Because if you look at customer segmentation, and this I'm just talking about banks globally, there are certain segments in the market which is not profitable for them. It's not easy for them to focus on that segment of the market and make money. But fundamentally what we do is we make sure that plumbing comes at almost a zero cost, or the cost of the plumbing through technology is so low that those segments of the markets become profitable for them, attractive for them to go after. So that's the point I want to make. As banks becomes customer focused and they focused on changing the plumbing fundamentally the way it exists today, those segments of market will be better served because now it's worthwhile for them to serve that.
And the plumbing can be done by fintechs. It can also be done by banks. So the front end could be a telco, it could be STC, it could be an internet company, it could be a traditional retailer. We can provide the pipes that connect in. And on the question on inclusion, it depends on where we are in the world. In Nigeria today or in India today, there's a case for inclusion to be made. In some countries, such as the UK or the US, it's actually too much credit. So it depends on where you're looking, but definitely the answer to inclusion depends on the country. It could be a telco, it could be a retailer. I was in Nigeria a couple of weeks ago, and it's a collaboration actually of telcos, banks, and the mom and pop shop working together that delivers the financial inclusion.
It's a very strong
one alone can't do it.
Okay, well,
one cent on this.
Please,
although I don't know that much about core banking, our core banking has a suite for financial inclusion, which supports micro lending and micro payments. So I think on the stage, as you mentioned initially, there is no micro solution provider. We do provide to banks, so banks have to provide it.
We had your colleague on stage in Cairo last week, actually.
Sorry?
We had your colleague on stage in Cairo talking about financial inclusion, so I do know. But yeah, I mean, technology is a part of that. The minister is here. We're going to need to draw this to a close. I want to thank all of you, gentlemen, for being part of this discussion.